up, guys? Welcome back to another YouTube video. So tonight we're going to be taking a look at technical indicators. We're going to answer 4 basic questions about technical indicators. What are they? What are they used for? What are some of the most common ones, and why are they important? So what is a technical indicator? That's the first question. When you fly an airplane, well, not you, but when a pilot flies an airplane and he flies into a cloud, he can't really see anything. So how does he know like how high he is, or how fast he's going, or his heading? Well, what he does is he looks at his instruments, which are indicators of how fast he's going, or of how high he is, stuff like that. They indicate to him information that let him fly the airplane more accurately. So what a technical indicator is an indicator that relays information to us so that we can make smarter trades more accurately. So to answer the second question, what are they used for? I kind of just answered it, but to elaborate, they're used so that you don't blow up your portfolio. They're used so that you can predict different, or you're never going to be able to predict the future, but you can increase your probabilities of making smarter trades by using these technical indicators. So they can come in the form of graphs, charts, lines on top of charts. Some of the most common ones, to answer the third question, are RSI, MACD, volume, VWAP, moving averages. All these different things, if you've never heard of these things before, that's fine. I'm going to make a video for each one of these technical indicators, going in depth about them, but so that you guys can see kind of a general gist of what they are right off the bat, I'm going to kind of give a little summary of each. So these are going to be the technical indicators that are most used, that I use, that professionals use, stuff like that. So to dive right in, let's look at RSI. RSI stands for Relative Strength Index. Basically, this is a picture of RSI. So you can see there's a range of 70 and there's a range of 30. As soon as the stock goes past 70, it's considered overbought. So that means a lot of people have bought it. That means too many people have bought it, and that it typically is going to sell off afterwards. And what indicates a sell-off? Well, you would want to buy puts, right? So if you can see what I'm putting down, these technical indicators indicate before stuff happens. They show you behind the scenes stuff, give you data that you wouldn't just see by looking at a chart, and allow you to make smarter trades. So if you can see, when it gets down into the 30 range, it turns that blue color. So that means it's oversold. That means too many people have sold it, and then there's a high likelihood that it's going to be bought back up and it's going to climb back into the range. That indicates a perfect time to buy 99% of the time. Well, I don't want to say 99% of the time because someone's going to hold me to that, but you can use it as an indicator to buy. You don't want to buy if it's all the way up in the 70s. You don't want to buy calls. You don't want to buy expecting it to go up if it's all the way up, past 70 in the red. But you do want to buy when it's down in the blue. That's a good indicator. That's just one indicator. There's several other indicators you can look at on top of that to make an even smarter decision. The next is moving average, adding together all the averages and basically finding the median, finding the middle, and then they chart that. So typically the moving averages act as support and resistances. And if you don't know what those are, basically it's when you look at a chart and it goes up and it goes down and it goes up and it goes down and it forms a channel. The top of that channel is called the resistance. The bottom of that channel is called the support. So you can use that as well as a technical indicator to determine when to buy high and when to buy low and when to sell high. Or if you're doing puts, when to buy high and when to sell low. Moving averages work as perfect support and resistances lots of the times. I don't want to say every time because obviously it doesn't, but moving averages for sure can help you predict when you want to buy and when you want to sell. VWAP is another one. VWAP is actually a study. So basically what it is a mathematical channel based off the computer. The computer computes this channel and creates an upper channel and a lower channel, as you can see here. So when a stock hits that upper band in that channel, it's known to reverse. And when it hits the lower channel, it's known to reverse back up, or the lower border or higher border. It's also known to trade in certain channels. So if it starts the day trading in the upper channel, then it's very possible it could continue the rest of that day trading in the upper channel. When it hits high, and then it'll use the middle line, as you can see here, as a support and as a resistance. So it'll bounce off of that and continue to trade in that channel. Obviously, this doesn't always happen. Well, it doesn't always happen, but if it does bounce off that beginning, you can for sure use that as an entry point, as a call or a put, or whatever you may. And these are all considered technical indicators. This is stuff behind the scenes that just looking at a stock chart you would not be able to predict, which is pretty cool. And it's something I didn't know for the longest time when I was first starting off as a beginner. I'm glad I finally learned, and I'm glad I finally got a platform that could show me these things. Thinkorswim is a perfect example of a platform that you could use that shows you pretty much every single one of these. And I'll be making videos that describes that more in depth. But to answer the last question, why are they important? Technical indicators are important because they will make or break your portfolio, especially if you're a short trader or you're a day trader. Fundamentals don't really matter when you're day trading or when you're swing trading. You have to look at the technicals when you're getting into this such short amount of time to trade in. And it's very specific. So long-term traders, you'll see, rely on fundamentals, and short-term traders rely on technicals. Fundamentals are the meat of the company. They're the profits, they're the revenues, net incomes, stuff like that, earnings per share. But for now, I hope this video is able to show you a little bit more in depth of what a technical indicator is and why you should focus on technical indicators if you're going to be trading short term. If you have any questions, please let me know. If you have any comments, just hit it up in the comment section. If you have any video suggestions, I would love video suggestions. It would give me ideas, and then I don't have to think of ideas. So thank you guys again for watching. Please have a good night, and subscribe.